Yo, what is going on, guys? Welcome back to my YouTube channel. In today's video, I'm going to be going over how I basically see market structure and how I implement that into my trading plan to consistently extract profits from the market. So yeah, let's get into it. All right, so diving into the charts here, I have pulled up for us the GBP to USD correlation chart, right? Okay, so what I want to show you guys is, we'll first explain to you the concept of structure and what it's supposed to mean, right? Okay, so let me go to a blank chart here. So drawing out my little pen tool. Love the pen. So we've all been taught the market goes up and down, you know, up and down, and then it has a major break, and then it's going to start doing the opposite, right? Yeah, that's not true. That's not how the market moves. Anyone who tells you that, it's wrong in my opinion. Like, for instance, you know, breakouts, like what happens if you try to take the breakout here? Instant failure. Breakout here, instant failure. So it's like there's more to it than that, right? So let's take it from a different approach, right? Well, what we've noticed, what us traders, aspiring traders, have noticed about the market is that there is lots of manipulation present. Like, I mean, a lot. So if you were to actually sit down and you taken the time to observe on the lower time frames, the medium time frames, and the higher time frames for any currency chart, you're noticing that the market is going to move in these range-bound pricing patterns, and it's going to initiate to some direction, right? Whether it's up, whether it's down, we don't know. We're going to find out, and we can then look back into the past and see it, right? Cool. Well, what ends up happening is market structure gets printed, ranges are forming, and price is continuing down, and it's continuing that same thing, and there's manipulation of highs and lows alongside that, right? So the theory is, if the market is heading in one specific direction, so let's call that on the daily, right? Then it makes sense to look for the ideas of sells still, since we're breaking structure to the downside. This would be denoted as breaking structure, breaking structure, breaking structure. But that does not mean that these are now strong, right? That's the difference. All it's showing is the relative trend in this specific direction. So utilizing that, we can now say that there's always, if I can get rid of that, hold up one moment here. Sorry. So now we can go ahead and say that there's manipulation in the market, right? And this takes place on any currency chart. I don't know about futures or indices or anything like that. I only trade Euro to US dollar and GBP to US dollar. Those are the two pairs that I focus on trading the most, and I've had a lot of success with. So now getting into the concept of manipulation. So it's kind of like, say the market's been bearish for a long time, right? And then all of a sudden the market went up. You're like, oh shoot, you know, we're gonna start going up for higher prices now, right? But then how many times does this happen? Right? And then you're like, well, why did that happen? And then you notice something like that, right? Well, this right here, to my understanding, is going to be the break in structure, but let's just call that a potential break. Potential break of structure. Cool, right? So we don't know if this low is going to hold or this one. Likely, in my experience, this is liquidity, right? And what we can use is we can use that information to now have like a filtration process to discern which areas in the market, the structure points, are likely to hold, and that's based off of manipulation and liquidity. Those are very, 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 very important things, in my opinion. So now going back to this, if we're to look at this from a structure point of view, let's go to this color. So it went like that, and then it did that. Actually, no. So it went like that, and then it did that, and then it did that. Okay, cool. So going to this present example, how I would personally see this, I consider this to be the potential break. Potential break in structure. I'm seeing what this low becomes. If anything happens in here, I might look to be invested at what that could be, you know, materialize into if it meets the trade setup of mine. But likely, the first break in structure is usually fake, right? This is something that I've noticed, and I've been taught from various educations throughout the years, that this is a very true fact about how the market likes to maneuver. So what happens is liquidity is always being created in the market, and these can be denoted as highs and lows, and also equal highs and equal lows, right? So in this instance, right, for this diagram that we're looking at here, I'm going to say that this was that liquidity and that this was a structure that manipulated one structure point and two structure point and then pushed lower. And if we look carefully, we can see that there's liquidity here, but it's a main high. There's liquidity here and liquidity here. This is known as internal range liquidity, simply because if you have a price like that, there's going to be the little bits in here that are going to want to come back down, and this is called mitigation. This is a very common terminology used for SMC trading. So in this instance, what I would be looking for to market a structure is, since this is now broken a manipulated structure point. So I could call this the BOS, and this is a 15-minute time frame, for instance. I'd call it the breaking structure of the 15-minute time frame, simply, right? So now what I'm thinking is this is probably going to be liquidity, and then we could come down here, and then we could look for the idea of trading long. That's a basic rundown of it. Now let's get into some actual charts. So here I am right now, and I'm just looking at GBP USD, right? And I'm trying to ask myself what's happening and why it's happening, right? So let's get into this. I can see here that we're breaking this little high here. That doesn't mean anything too much for me, but I'm just I'm noting it. I can see that we've also break this low. Cool. We can see that we've broken this high. Awesome. We can see that we've broken this high. Awesome. This low. Awesome. So as you can see, the market is quite random in its distribution of highs and lows. So what we cannot actually frame any real idea off of this alone, especially since we're on the 4-hour, because anything can happen. So what happens is we have to go down to lower time frames, and for this instance, I'm going to go to something like the 30-minute, right? And then we're just going to take a look at some of the repeating phenomenon that happens, right? So let's just see. Go to this little pricey action bit here, right? Is this a session time? There'd be a session here, here, and here. Cool. So getting out of that real quick. Look carefully as to how things repeat. We take high, take low, take high, coming up, we take that high, take this low, and we take that high again, and we continue to take that high, right? Beautiful. This is just an example of marking structure points in the market. Now these structure points, remember, this does not mean that these are going to hold. That is not what I'm trying to get at here, right? That's not true, not in my experience. What I'm trying to say is manipulated structure can be used to build strong trade ideas from. And what I mean by that is this. So for instance, say we had like a manipulation rangey thing and it came back and wicked all these lows and then rallied up, right? Now all of a sudden there's inclination to see that this could hold. Now whether or not you want to just go ahead and take a trade off that, if it meets your trading criteria, then sure, go ahead, right? Me personally, I still need to wait for more things. And in this instance, I'd wait for like one of my fancy entry models, and then after an entry model, seeing that a low would hold, would I then look for the trade to the upside, right? It just varies a lot on how someone chooses to enter the market, their risk appetite, their level of patience, their level of discipline, lots of things, right? But going out of that, going back away from the theory, what do we see here? We see manipulation of these lows here. Boop. Manipulation, so we can mark that like so and just draw it out, right? Now, I'm not saying this happens all the time, but have you noticed that the market continued bullish and this low got respected when this was printed, right? So we did that, tapped it, came back up, came back down, tapped it, but we never breached this low. Perhaps there's reasoning in that, right? Is there opportunities to enter that? Maybe. I'm not going to bother looking into it right now. We're on the 30M and I'm just trying to go over the concept of manipulation and structure. But certainly, if you look carefully, I'm sure you could find something. And now let's see here, again here. This is a classic example of trying to go long but the market goes short. So we broke structure to the downside, potentially broke structure to the upside here. People are looking now to buy here, to buy here, and to buy here. In my opinion, I wouldn't do any of that. You know, I wait for things very systematic to happen. And like trading schematics, I have 5 trading schematics, trade setups that I trust a lot, and I wait for this to happen. And I'm very patient. I'm very disciplined in the process. Let's see, go into here. Just to find something that looks really clean, because sometimes the market's unfortunately not very clean in its conditions, which in those times you shouldn't even be trading to begin with. Let's see, a bit of a hectic week. Okay, beautiful, here we go. So I'm gonna go to here, go to the 15M. Take a look here. We can see that market high and market low are being breached, and we can see that we are continuing lower still, right? This push came all the way to the downside and wicked past this. There wasn't a close, which is, you know, gonna throw some people off in their judgment. And when I say close, I mean market candle decided to close below a low point, right? That signifies things. But what I'm trying to show here primarily is an example of manipulation. So highs and lows, these little wicks here to the left, these are on a lower time frame, miniature highs and lows, and they represent internal range liquidity. So what's happened is we've done that, and we did this, and we left liquidity points evidently here and here, and we broke structure significantly to the downside, like so, right? So this is an example of a trade idea now. What you could look to do is now say, okay, well, we've manipulated highs and lows over here. We've broken to the downside. Is this in a session time? Can I take a trade? And is there liquidity for it to target and also use to fuel the move? And now I know many people personally who would absolutely be looking to take short trades right here. And I can definitely say that I'd probably be one of those individuals as well. It just depends on if inside of here my entry model is presented, right? And especially if it's at a session time, which it is. Beautiful. So yeah, I hope that was helpful, you guys. It's a little bit of a quicker video. Hopefully not too long. I apologize if it was. But yeah, that's just a little insight into how I see things, and I've been having great success with it. So wish you luck in your trading. Never give up. We all got this. Millionaire status, baby. Let's do it.